All right, so we're going to be talking about premium and discount in this video. Premium and discount is another concept, a part of the SMC library. And in simplest terms, what that means is premium means expensive and discount means cheap. In the simplest terms, that's what it means, okay? So right here, what I drew on this chart is something operating within a bullish market structure, right? So it's putting in higher lows. There's a higher low right there. There's a higher low right there. And it's making new highs. Boom, makes a new high. Boom, makes a new high, right? So it's operating within a bullish market structure. For something to be in a discount marketplace, for this example, what you want to do is you're going to take your price range from the most previous low to the break of that high. So for example, we're going to drag a Fibonacci on here from that low. Look at my cursor. And we're going to drag it to the high. And what we're going to do is we're going to find 50% equilibrium of that price range. See that? See how I plotted 50% equilibrium from the Fibonacci? Now let's take it off. There's 50% of that price range from the low to that surge up higher. Now what you're going to do next is once price trades lower, once it pulls back and trades lower beneath that that equilibrium price point, that 50% equilibrium, that price range, once you trade beneath 50% equilibrium of that, anything beneath 50% equilibrium is in a discount marketplace of that price range. Anything above it is a premium. Okay? Anything below it, discount. Anything above it, premium. Okay? Now, what about if price comes down and it breaks that low and we have a shift in market structure? If we have like a shift in market structure, is it still in a discount? Is it still cheap? Because I remember, Mike, you've said when we have a shift in market structure, that's a change in trend. So therefore, wouldn't it be bearish? Therefore, it's not a discount marketplace. No, it's still in a discount marketplace, even if it breaks that low. That's another thing. If we break a swing low level, if we take out sell side liquidity, we enter a discount. It can be bearish overall, but still be in a discount. So whenever we take that swing low out right there, we enter a discount marketplace. It's cheap. Okay. Anything below that 50% equilibrium is cheap. Okay. All right. So same exact deal with bearish scenarios. You just flip it around. So for example, we take this high right here. We take our Fibonacci. We plot it on there. We draw out that price range. And we find 50% equilibrium with that price range. Okay. So we're going to plot it on here just so you can see it better. Now, anything above that 50% equilibrium is in a premium. Anything below it is a discount. Okay, so while we're down here, while price is down here, even though it's bearish at the moment, because it's saying, remember, it's bearish market structure. It's consistently putting in new lows. It's consistently putting in lower highs. So it's operating within a bearish market structure, but down here, it's still considered cheap. It's still considered cheap. Why? Because it's below 50% of that price range. It recently took out this sell side liquidity. Therefore, it's cheap. But the second it trades above 50% equilibrium of that price range, it becomes expensive. It enters a premium. Premium means expensive, remember. Okay, and same deal. And once it trades up into a premium, that's the area where you want to be looking for selling opportunities. You want to be looking for shorting opportunities, and then you can look for lower prices. Okay, by getting your entries, if you're shorting in this scenario, by getting your entries in a premium, you're able to minimize risk more. Okay, you're able to minimize risk more because it's above 50% equilibrium. It's in an expensive area, and then you will look for lower prices. Now, same deal. Say it doesn't hold, and say price rips up and it has like a shift in market structure. It's still in a premium. Why? Because it took out this buy side liquidity. It took out this buy side liquidity, and it's above 50% of that price range on that shift in market structure. So it took out that buy side, therefore it's in a premium. Even if it had a bullish shift, even if it was a high probability shift, like you got the whole deal, you got the fair value gap, bullish fair value gap, you got a strong close, you got all of that. It's still in a premium marketplace, even after that shift. But after you get a shift, now what do? You're going to have to draw on a new price range. So now we take that low to the high of the shift, and we find that new price range for like wherever it tops out at. You're going to find that high. And you're going to draw the same exact deal, guys. You're going to take 50% equilibrium of that price range. See that? And you're going to plot it on there, remove the Fibonacci, if you want to. And now you got 50% equilibrium right there. While price is above that 50% level of whatever price range is created there, it's in a premium. Whenever it's below it, it's in a discount. Okay. Second, it trades down into it. You could look for buying opportunities in here. After that shift in market structure, look for that swing low to get put in a discount marketplace. You could look for buying opportunities in here to get long, because why? It's in a discount now. And same deal, say it doesn't hold, say this level does not hold, no problem. It comes down and it breaks that low. It's still in a discount marketplace. Okay. Now I'm going to show you what it looks like on a real chart example. So we're going to take this GBP/JPY from the other day. So a lot of you guys are familiar with my strategy and how I trade at this particular moment. GBP/JPY, it pulled back into a 4-hour discount. Right here, we pulled back into a 4-hour discount. So we're going to do the same thing that we just did there. What are we going to do? We're going to take, because this is operating within a bullish market structure right now. Why? Because it's putting in, because it's in higher lows, it's consistently making new highs. It's operating within a bullish market structure. The trend is bullish. So what we do is we're going to take the most recent price swing. All right. I want you to forget this over here right now. Just forget that exists. These two green candles right here, forget they exist. And I want you to focus on this pullback, this price range. This is the most recent swing point prior to breaking these highs. So that makes this a price range. You got your swing low level, and then you have the surge up higher breaking these highs. What you're going to do is the same exact thing we just did a second ago. You're going to take your Fibonacci from that low to that high right there. See that low to high, and you're going to find 50% equilibrium of that price range, which is right here. See that? Anything above it, premium. Anything below it, discount. Okay. And you can see price came below. It traded below a discount marketplace. And here it was very cheap on the 4-hour chart, that is. And then it popped up. So you could have got an entry down here. Possibly. You could have got an entry down here and anticipated higher prices. Now, premium and discount. Now we're on a 1-hour chart. So premium and discount, it occurs on every single time frame. Like you can be in a premium marketplace on one time frame, but then you can be in a discount marketplace on another time frame. So you need to know where you are in each time frame. Okay. So now we're on a 1-hour chart. See this horizontal green line? That's that 4-hour equilibrium. Okay. So remember, that's that 4-hour equilibrium price point. Anything below it is a 4-hour discount. Anything above it is a 4-hour premium. Now we're on a 1-hour chart, and the 1-hour chart, you have an entirely different story than the 4-hour chart. So right here, you can see it's where we first had that pullback into a discount on the 4-hour, now displayed on a 1-hour chart, and it's operating within a bearish market structure in here. At this current moment, it was. So then it comes down into a discount. It has a reaction. Okay, so at this point, it was in a 4-hour discount, it was in a 1-hour discount, but it was operating within a bearish market structure. Again, look at my cursor. 4-hour discount right here. 1-hour discount. Why is it in a 1-hour discount as well? Because it's taking out this, see this? We took out this sell side liquidity right here. We take out sell stops like that, we're in a discount. So we're in a 1-hour discount. We're in a 4-hour discount. So it's cheap on both time frames right there. Okay. But it is operating still within a bearish market structure. Bearish market structure, but it's short-term cheap down here. And also I want to make clear, something can be cheap and keep getting cheaper, guys. All right, it's not a science. Something can get cheap and keep getting cheaper here. Okay, but still the rules stay the same. It's in a discount marketplace. What happens next? Price pops up higher. Look at my cursor. Price moves up higher. As soon as it moves up higher above this equilibrium price point, it's back in a 4-hour premium. As soon as it moves back up higher, it's in a 4-hour premium, and it's in a 1-hour premium. Why is it in a 1-hour premium? Well, we're going to take the most recent price range on the 1-hour chart. Take this high. See, we've got our swing high level right here prior to the displacement to that low. What you're going to do is you're going to find 50% equilibrium of that price range, which is right here. Now let's move our Fibonacci. Right there is that 50% of that 1 hour price range. So as soon as we moved above 50% of that 1 hour price range, we entered a 1 hour premium. We're also in a 4 hour premium. And the market structure at this time was bearish. Then what happens? Price comes up and it takes buy side liquidity right there. Takes out buy side liquidity. So it's very expensive at this point. Because remember, that was a shift. So that was a shift in market structure, but it's expensive. Therefore, you can look for, knowing that it's expensive, this is a possible counter trend trade in here. Knowing that it's expensive on the 4 hour, since it's above 4 hour equilibrium, it's above 1 hour equilibrium. It's taking out this high right here. What can we do now? We can utilize in lower time frame again. So I don't even go below the 15 minute. I'm just doing it for this example here because it makes for a good example with this particular scenario. Right now I'm on a 5 minute chart, and right here you can see this is our 4 hour level. Look at my cursor. There's that 4 hour equilibrium price point, and then the one right above it is that 1 hour equilibrium price point. So we're operating within a bearish market structure. Price moves up, and as soon as we're above this, we're in a 4 hour premium, we're in a 1 hour premium. Price comes up and it takes out high of day, which we just concluded a second ago. So taking out high of day right there, what does that mean? Well, that means it's in a shift in market structure now. Okay. So now that we got a shift in market structure, we need to update it. So 1 second. Now that we had a shift in market structure, we're going to take the most recent low to the most recent high because we got this new price range to work with now. The shift in market structure, new price range to work with. And we're going to find 50% of that level. We're going to find 50% of that price range. And boom. Very important to note since it's now switched to bullish. And the higher time frame is bullish as well. So if you're like counter trend trading, this is very important. You got to be much more precise with it. We take out that high, we take out that buy side liquidity. What happens after that? You get a move lower. You get a lower time frame 5 minute shift in market structure here. Now, this is what I'm talking about. When I say you can be in a premium, again, you can be in a premium on several different time frames, but in a discount on another. Because up here, guys, we've already concluded the 1 hour's in a premium, the 4 hours in a premium, because look, we're above both of these levels right here. We're above the 1 hour, we're above the 4 hour. But on this displacement right here, what did we take out? Right after purging that buy side, we came down and we took out a swing low level. I'm going to note it on there for you real quick so everybody sees it. See how we got our swing low right there? Lows low in the middle, 2 higher lows on the left and the right. And then price breaks that swing low. What does price enter as soon as it breaks that swing low? On the 5 minute chart now. Price enters a discount marketplace. So on the 5 minute time frame, it's cheap. But it's still expensive on the 4 hour and the 1 hour. But the 5 minute is cheap. And this is why it's so important that you understand this, because it's very important when it comes time to execute, when it comes time to getting your entries in. Because you don't want to be, in this case, because like imagine with me for a second that we're counter trend trading this, that we're looking for a short, we're looking for a sell down into these levels. You don't want to be short in something when it's in a discount marketplace, when it's just recently taken out of the swing low level. You want to get your entry preferably in a premium marketplace, right? So what you're going to do is you're going to take the most recent high, same deal as we did over here. You're going to take that most recent high prior to the shift, and you're going to measure that price range. See the price range right there? As soon as we come above 50% equilibrium, we take out, as soon as we take out these buy stops, and now we're moving above 50% equilibrium of that price range, now you enter a premium marketplace. At that point, you're above 50%, you're taking out these buy stops, you're in a premium, you're expensive again. You can look for an entry in there on your 5 minute, risking that high, and then you could take it down into that 1 hour and 4 hour. So that's a clear representation of how you can be in a premium on one time frame, or you can be in a premium on several time frames, 4 hour, 1 hour premium up here. But on the 5 minute chart, you enter a discount, and you got to wait for that lower time frame to be in conjunction as well. You want that lower time frame to be lined up where you want it as well. Okie dokie. And then you can see it moves lower. While it's moving lower right here, while it's trading lower right here, it's now in a 5 minute discount because it's taking out these lows. But it's getting cheaper, it's getting cheaper, it's getting cheaper. And now at this point, it's moving down into a 1 hour discount. It's because it moves below this level right here. We move into a 1 hour discount, and then we move below into a 4 hour discount. So now it's cheap on the 1 hour, it's cheap on the 4 hour, it's cheap on the 5 minute, it's cheap everywhere. The higher time frame chart is bullish, and then it ramps up. Okay. For my strategy and the way that I trade, for my particular strategy that most of you are aware of, I don't particularly need price to like stay in that 4-hour discount for me to get an entry. Like this other day, it moved out. It was out of a 4-hour discount by the time I bought this the other day. With the way that I trade with this, or at least at the way that I trade at the moment, I can't forecast the future. I'm trading with a higher time frame trend. I'm trading with a higher time frame market structure. All that I need on the 4-hour chart is I need price to move below that 4-hour equilibrium price point into a discount if I'm buying. And at that point, it's good for me. It's good for me. And then my entry on the lower time frame needs to be in a discount. There's no negotiation on that. It has to be in a discount on the lower time frame for me to enter. But the 4-hour chart, it doesn't like have to be in a discount. I don't have to like get my entry in a 4-hour discount, but I needed to have pulled back into a discount. Needed to have pulled back into a discount, but I don't need it to like remain in a discount for my entry if I have the higher time frame trend backing me. That's the key point. Now, if you're counter trend trading, you need to be more precise. Like I said, you got to be on top of it. You got to be aware of where you are in different time frames. And really, counter trend trading, I would say it's not really a beginner trader's game. It's definitely more complicated, but that's very important. You got to know where you are on several different time frames. You got to know where you're, because as I said, you can be in a premium on one time frame, and then you could be in a discount on an entirely different time frame. So you got to be aware of that. So you can see price rips up on this leg up right here. Now we're back up in a 1-hour premium. We're back up in a 4-hour premium. We're taking out these highs. Now, let me just clear this off real quick. At what point will we enter back into a discount? So where do we draw our Fibonacci? Well, we take this low right here to that high, because that's the current high. If it keeps extending up higher, then you just have to adjust your Fibonacci based on where it tops out at. But at the current moment, this is the absolute high, right? So we're going to take that low, the absolute low of that price swing, the absolute high, and we're going to find 50%. At the current moment that I'm making this video, there's your equilibrium price point of that 4-hour price range. So right now we're in a premium marketplace on the 4-hour because we're above 50%. We're taking out this recently took out this buy side liquidity. It is expensive right now. It's bullish, no doubt. It's very, very, very bullish, and it can continue to keep getting more expensive without pulling back into a discount right away. But it is expensive. It's in a premium until it pulls below 50%. Same deal. Maybe it has a shift in market structure. It very well could. It might have a big, strong shift in market structure, crack that low. It's still in a discount marketplace. Even if it has a bearish, high probability bearish shift, it's still in a discount marketplace because we took out sell side, and it's going to remain in a discount until it trades above 50% equilibrium of that new price range. Again, imagine with me for a second that it cracks. You're going to find 50% right there. Look at my cursor. If it's below 50% equilibrium of that new price range, it's in a discount. Above it, it's a premium. It's literally that simple. You just plot your Fibonacci on and you play these individual price ranges, and then you work your way through each time frame, like maybe 4-hour, 1-hour, 15-minute, and then because we all have different time frames. Some of us, like lower, like extremely lower time frame charts. Some of us like higher time frame charts. Just apply it to your time frame and then work within those individual time frames and know where you are on each time frame. All right, so we're going to take Euro USD. Right now on this 4-hour chart, is it in a discount or in a premium? Is this in a discount or a premium? Well, what do we do to determine that? Right now, it did have a bearish shift recently. They did have a bearish shift in market structure recently. But even though it's had a bearish shift on the 4-hour chart, that is, it's currently cheap in a discount marketplace. Why? Because it's below 50% equilibrium of that price range. So again, we're going to plot 50% on there. See that? See how it's below 50% equilibrium, which means it's cheap right now. It's short-term cheap right now. Market structure recently had a bearish shift, but it's still cheap at the moment because it's below 50% equilibrium. Okay? The second it trades above, the second it gets above that 50% level, it's expensive on the 4-hour chart. Okay, so like say for example, you wanted to get a short in, you would want to get, if your execution time frame is like on the 4-hour chart. So if you're executing on the 4-hour chart, like I execute on like 1 hour, 15-minute, 30-minute. But if say your execution is on the 4-hour chart, then you want to get that entry in a premium marketplace. Makes sense? Because that's another reason why like I don't need price to be in a 4-hour premium or discount, depending on whether I'm buying or shorting. because it's not my execution time frame. I needed to have pulled back into it, but I don't need it to like remain in it. What's important is for me and my entries, I need my lower time frame execution in a premium or discount, depending on whether I'm buying or shorting, because that is my execution time frame. That's where I want to get very precise. Okay. But if you're executing on the 4 hour, for example, then you would want to get your short entry up here in a premium. Same deal. Say price doesn't hold up here. Say it's just a fake out and then it rips up and it breaks high of day. Let's say it does that. Let's say it breaks up, rips up and breaks high of day. It's still in a premium. It's in a premium. It's above 50% of that price range. And now it's broken that high. So now we have a new price range to work with. We took out that buy side liquidity. It's in a premium marketplace. And now we have a new price range. Same deal. You're going to update it now, because you're going to have to keep updating it, and you're going to draw that new price range, and you're going to find 50% of that. Okay. What are you going to do? You're going to note it. Anything above it, premium. Anything below it, discount. Okay. And the same thing that I've talked about in the market structure videos and other videos. Then you could utilize, this is very important, because then you can utilize lower time frame charts. Look for those change in market structure, and you could look for moves back down into a discount. So there's a lot of things you can do with premium and discount ranges, because it's just that's what happens. Price moves from premium to discount to premium every single time frame. The 1 minute, 2 minute, 5 minute, 10 minute, 15 minute, hour, daily, weekly, monthly, every time frame, premium to discount. It happens. Okay. And it's that simple. It's that straightforward, and it's very, very effective.